To start with China, I mean, it's good when we see the growth coming in better than was estimated out of China. This does open up more opportunities to perhaps de-lever the economy as well. Is that the subtext here on the growth?
I think you're absolutely right what you said earlier on about the predictability of the figures. I don't think anyone's going to be particularly surprised by that number. And certainly, I think it's becoming the consensus that growth has stabilised in China. And certainly that's the view that the stock market has taken. I mean, last year was an absolute banner year for Chinese equities. And I guess that's what concerns me a little bit, is that, it's all really sort of built into the price now, that what concerns me is that 2018 might be a more difficult year, a more volatile year. The debt concerns have not gone away. The squeeze on pollution is going to slow down growth, and we haven't even talked about the potential for trade wars with the US. So I think 2018 looks like being a slightly more difficult year than 2017 was.
Which is the biggest risk, though? You ended with trade wars. It's something that Anna and I have touched on with a number of guests. How real a risk is that, and does that cause you in any way to reduce any kind of exposure?
Well, I mean, it was the dog that didn't bark in 2017. Yep. I mean, if you look at the campaign rhetoric from Donald Trump, he was going to declare China a currency manipulator. It didn't happen. Really, it was the story that we didn't hear about in 2017. However, he was on the phone to Xi Jinping this week, saying he was disappointed by the trade figures. I think that the steel and the aluminium imbalances are beginning to worry the US. So maybe that is a story that comes back in 2018. In terms of reducing exposure, I think you can't really generalise too much about the Chinese market, because there are huge differentials between the fast growth technology stocks, the Alibabas, the Tencents, and the A shares. The Chinese stocks listed in Hong Kong, listed in America, had an absolutely fantastic year, up sort of 70% since Trump's inauguration. However, the A shares have really underperformed. So there is value in China, but it's in the A shares and not elsewhere.
Yeah, and one of your colleagues, Linda Zhu, saying that China stock rally will sustain in 2018, but big caps may be volatile after the 2017 run. Where are we on the opening up of China from your perspective, Tom, either as an investor or from the corporates that you're talking to? How happy are they with access to the Chinese market, or for financial services, their ability to own businesses there? How do you see that path developing in 2018? Well,
I think it's heading in the right direction. I mean, clearly, overseas investors now have the ability to invest directly in the Chinese market. We've got the A shares being introduced into the MSCI indices, and I think that that is heading in the right direction, clearly.
One of the things that's coming through on the T-Live discussion that we've got with our editors is focusing in on consumption. Consumption contributed 58.8% to China's GDP in 2017. This is NBS says in a statement on the website. Now, if we look at the breakdown of that, that's autos, communication appliances, jewellery, daily use items. The consumption side is where we want to build and we want to see a growth. Is that where we focus a little bit more, perhaps, rather than the fixed asset investment this year? Because we know that he's trying to rebalance the economy, and that's naturally going to be where you see a squeeze on that side.
Yeah, I mean, clearly this rebalancing is taking place. It's taking place over time. It's not going to happen overnight, and I think that's why we saw the fixed asset investment figures were still pretty high. So, I mean, that's not going to disappear, and it would be worrying if it did disappear overnight. But clearly, the transition to a more consumption-led economy is where the future is, and as an investor, that is where we are finding the most interesting opportunities in that transition.